this is your own channel named Rajasthani Commerce Youth with a different vision of enlightenment. I watch your place for the pregnant people to solve pregnant questions. Today I'm back with another topic of the chapter called royalty account, that is the sub-lease topic. In my previous three videos, okay, the part for this chapter, three videos, I have already mentioned these three topics, like first practical question with without strike year, second one practical question with strike year, and the third one minimum rent account. So we have already worked on these three topics. If you haven't watched my video, so first of all, go and check it out so that you can understand this one better. Okay, so today we're going to jump on the next topic called sublease account. Okay, so let's just do it. Sublease. So before we go on and get our hands on the practical question, I would like to let you know a bit about the concept of sublease. Okay, as I have already mentioned here for your convenience, that concept of sublease is like when a lessee, okay, when a lessee re-grants whole and partly part of a particular property which has been granted by a lessee or the real owner of that particular property to a third party by the lessee to a third party with a similar purpose cause of honor of that property granted him, to whom the lessee the lease of his property, of owner's property, of lessor's property, is called sublease. Okay, sublease. Like I have also given you an example in my first and second video. Okay, the example of lessee and lessor, the meaning of lessee and the lessor. I have already mentioned you that the Mohan, who is the lessor, owning a property, okay, also willing to lease out his property in place of gaining some money, okay, in place of gaining some money. And another side, the person who we name the Sohan, who is also known as lessee, okay, also willing to take over a property as a lease, to acquire a property as a lease for some period, for a spell, okay, so that he can generate some money while using this property. I have already mentioned. Okay, and now in the concept of sublease, now the lessee, okay, this lessee who owned this property from this one, okay, the Mohan, the lessor, now he grants his properties rights, okay, grant his properties rights, like the wholly part of this property and a partially part, okay, like one-fourth part, okay, one-fourth or one and a half part of this property to a third person, to a third party, like whose name is, you can call him anything, okay, you can call him anything, for the same purpose, okay, for which he acquired from the lesser, this property from the lesser. So that will be, so that concept and that process will be known as sublease. Okay, for this sublease, the third party, which is this one, okay, let's name him anything, like Amir, okay, Amir, like name him Amir, okay, name Amir, for the same purpose, paying him who's lessee like a lessors, okay, considering him who's lessee like a lessor for the same purpose. We're going to see how it will work when we will go on the practical question. So I have already told you from that point. And the lessee merely can transfer whole or partly part of that property to the third party, here you can see, when such right is granted by the lessor at the time of contract. Okay, only by taking lessor's property, only by taking lessor's permission, okay, after taking lessor's permission, only on that particular permission, the lessee has right to sublease the property. Whose property? The lessor's property, to the third party, to a third person. Without his permission, in absence of his permission, whose permission? The lessor permission, is not able, he has not liberty to do such kind of thing. Okay, it is out of his jurisdiction, whose lessee's jurisdiction. So let's come on the practical question. Now here is the question. R Limited, okay, leased a mine, acquired a mine in the year of 2015. Okay, in the year of 2015. Actually, here is some misprint, so I'm gonna write it like 2011. Okay, in the year of 2011, okay, from S Limited on the following terms and condition. Let's see what's the terms and condition. Royalty payable 0.50 per ton, okay, per ton coal raise on actual raising, whatever raise, the royalty will be payable of rupees 0.50 rupees per ton. Okay, and subject to a minimum rent of 2000 per annum, with the right to recoup minimum rent out of the subsequent 2 years short working. 2 years working, excess working, not short working, okay, excess working. So here R Limited gave sublease of a proportion, as I have already mentioned, okay, when I told you sometime before, like he who lessee can lease out, okay, lease out or sublease the lessor's properties wholly part or a partly part. Okay, so here you can see the sublease of a proportion, okay, not wholly but a proportion, a partly part of that particular property, which also leased by the lessee at the first time. Okay, so proportion of the mine in the year of 2016, okay, which I'm gonna turn into the 2012. Okay, in 2012, so T limited to T limited. Okay, now the lessee R limited who leased the mine, who acquired the mine from S limited in the year of 2011, now the R limited going to sublease a proportion of that property which has been leased by the S limited, okay, in the year of 2011, to the T limited in the year of 2012. Okay, it's so simple. On the following terms and condition, here you can see R limited has been leased, okay, by S limited on some terms and condition, and here you can also see the R limited, okay, R limited going to sublease a proportion on some terms and condition. Let's see what is this, like royalty payable 0.75 per ton, okay, on actual raising, subject to a minimum rent amount of rupees 750 per annum, okay, and the minimum rent being recoverable out of the subsequent 2 years short working. Okay, 2 years subsequent years excess working. So let's see the raising. Okay, in the year of 2011, okay, mines operated by R limited. So from there the production came out in the year of 2011 4,000 tons. Okay, in the year of 2012 2,000 tons, in the year of 2013 1,200 tons, in the year of 2014 5,000 tons, in the year of 2015 2,000 tons, and the mines operated by the T limited, which has been granted by the R limited, okay, the sublease, okay, to the T limited. So here you can see the mines operated by the T limited. So in the year of 2011, were there any production? No, that was nil. So in the year of 2011 it was nil. Okay, so here you can see in the year of 2012, yeah, there was some production amount. Here you can see 1,000 units and 1,000 tons, and here you can see in the year of 2013 800 tons, in the year of 2014 600 tons, in the year of 2015 3,000 tons. So I would like to suggest you to first prepare sublease analytical table. Okay, sublease analytical table, just because of when you prepare the lease analytical table for the normal lease, okay, like uh, for like R limited, okay, R limited to the S limited, R limited to the S limited, so you have to add 4,000, okay, the whole production amount which has been produced by the R limited or the T limited, the whole amount. Like in the year of 2011 4,000 plus 0, there was nil. So what, the whole production of the 11 by the two separate parties, okay, like 4,000 plus 0 is equal to 4,000. In the year of 2012 2,000 tons plus 1,000, 2,000 produced by the R limited, okay, produced by the R limited mine, okay, whatever the R mines were undertaken by the R limited, so that is the production amount definitely belongs to the R limited. So 2,000 plus 1,000, okay, 2,000 plus 1,000, the 1,000 tons production has been done by the T limited's mine. So total production amount you can see here, 2,000 plus 1,000 is equal to 3,000. In the year of 2014 1,200 tons plus 800 tons is equal to 2,000 tons. In the year of 2014 5,000 plus 600 tons, so 5,600. In the year of 2015 2,000 plus 3,000 is equal to 5,000 tons. Let me tell you how to do this. Okay, here you can see, first of all we're going to prepare the analytical table in case of sublease. Okay, in case of sublease granted by R limited, the first person, the first lessee to the T limited. So while preparing the sublease, okay, analytical table, here you can see the whole process will be same, like year, first column for the year, second column for the actual royalty, third one for the minimum rent and short working, like deficiency and excess working and recoupment, unrecoupment, and actual payable amount to the lessee, which in such condition is the lesser for the T limited. Okay, for it is who R limited is the lesser for the T limited, just because of lesser is payable, and he is forcefully payable to the R limited. Okay, in such case, so we're going to prepare the analytical table in case of sublease. How we're going to do this? In the year of 2013, first of all write down all the years, okay, like 12 13 14 and 15, mention in the book, okay, mention in the question, like your, and I have already told you that how to calculate the actual royalty amount. Okay, all you need to do, just simply you have to just simply check out the column, okay, in which the whole production is done by the T limited. Okay, just because we are preparing sublease, we are preparing sublease analytical table. In such case, T limited is payable to the R limited. So how much actual royalty and minimum rent would be payable by the T limited to the R limited? In order to figure out, we have to prepare the sublease, okay, analytical table, and To figure out the amount of actual royalty, you have to, as usually, okay, simply have to multiply the amount of production, okay, with the rate of actual royalty. Okay, here you can see, while granting sublease to the T limited, the R limited impose some terms and condition on the T limited. Okay, in which the funds, the royalty payable amount was 0.75 per ton on actual raising, per ton on actual raising. Here you can see actual raising in the year of 2012, were 1000 tons. Okay, just because in the year of 2012 there were no production, okay, there were no production amount. Okay, just because of the R limited granted the sublease of this property to the T limited in the year of 2012, and he has been handed over that property in the year of 2012 itself. So it doesn't make any sense that there will be any production. Okay, there will be any production in the year of 2011, that was empty. Okay, so you just simply have to multiply the 1000 tons with 0.75, okay, and 800 tons in the year of 2012, in the year of 2013 with 0.75, 600 tons, okay, which came out in the year of 2014 with 0.75, and 3000 tons came out in the year of 2015 with 0.75 tons. Okay, this is the rate of actual royalty per ton. So after multiplying, here you can see the result for the year of 2012. When you multiply 1000 with 0.75, you will get 750. Okay, then in the next year, in the year of 2013, 800 multiply with 0.75, you will get 600, and in the third year, which is 2014, multiply with 600 tons with 0.75, you will get 450, and in the last year in which the production occurred, amount 3000 tons, okay, multiply with 0.75 rate of royalty, you will get 2250. Okay, 2250. So that is the actual royalty amount. Now what is the minimum rent? Okay, so here you can see it was also mentioned under the terms and condition, like minimum rent would be payable of rupees 0.750 per annum. Okay, 750 per annum to the R limited, itself, as you can see here. Okay, so here you can see in the year of 2012 750, in the year of 13 750, 14 750, and 15 750. Okay, for the all 4 years, during the period of lease, during the period of sublease, here you can see the same minimum rent amount would be payable, or applicable. Now simply you have to figure out the deficiency or excess amount, okay, like you usually do while calculating any question regarding this chapter called royalty count. You just have to figure out the difference between the actual royalty and minimum rent. Here you can see there is no difference. Okay, there is no difference in the year of 2012. In the year of 2012, 750 actual royalty and minimum rent is also similar. So no deficiency and no excess royalty amount will be existed. In the year of 2013, you can see here is a difference of 150 rupees. Okay, short working, just because of the minimum rent amount is greater than the actual royalty amount. Okay, the minimum rent amount is greater than the actual royalty amount, which is by 150. So here you can see the amount of short working of rupees 150. Okay, 150. In the year of 2014, here you can see the difference between the minimum rent and the actual royalty of rupees 300. Okay, which came out as short working, just because of the minimum rent amount is greater than the actual royalty amount. Okay, so the whole difference amount would be payable by the lessee from his own pocket and will be considered as his loss. Okay, in the year of 2015, here you can see a huge amount of excess working, more than the short working. So here you can see in the year of 2015, the minimum rent amount is less than the actual royalty by 1500 rupees itself. Okay, now moving on to the next column, which says about the recoupment. Okay, in which there is two things, like what amount is recouped and what amount is still unrecouped. Let's figure out that. Okay, so in order to figure out the recoupment amount, there is some terms and condition, okay, provided by the lessor. So in such case, in the case of sublease, here you can you have already know that the lessee, okay, the R limited is the lessor, and the R limited granted sublease to the T limited on his terms and condition. Okay, on the basis of his terms and condition. So we have to figure out and see that what's the terms and condition is there regarding the recoupment provided by the R limited. Let's check out. Here you can see, I hope it is visual to you properly. Okay, from the, like, here you can see a line is given here, like regarding the recoupment, that short working royalty payable 0.75 per ton on actual raising, subject to a minimum rent of 750 per ton per annum. the minimum rent being recoverable out of the subsequent 2 years excess working, okay, out of the subsequent 2 years excess working. So that it simply means that any short working occurs in any year, that short working amount can be recovered out of the 2 years, out of the subsequent 2 years excess working amount, okay, out of the 2 years subsequent years, out of the two subsequent years excess working amount. As you can see, in the year of 2012 there were no short working amount incurred, okay, there were no any short working amount incurred in the year of 2012. So moving on the next year, here you can see in the year of 2013 there were a short working amount of rupees 150. So as per the terms and condition, that any short working amount can be recouped out of the 2 years, two subsequent years extra working. So let's figure out that here in the year of 2013 the amount incurred of rupees 150 as short working can be recouped out of the two subsequent years, like in the year of 2014 and out of the year of 2014 short working and 15s. Okay, so here you can see there were no short working came out, okay, came out in the year of 2014 itself, but there is in the year of 2014 of rupees 1500 excess working amount. Okay, here you can see short working itself, so cannot be recovered the amount of short working by the short out of the short working, okay, just because it is as well negative amount and this is also as well negative amount, so it cannot be recouped. Okay, so here you have to move on the next year, like in the year of 2015, and here you can see an excess working amount of rupees 1500, okay, which is a huge amount and can be utilized to recoup the short working amount of rupees 150. Okay, so here you can see 150 amount has been recouped. Okay, so the whole amount of short working has been recouped in the year of 2015, as you can see. Now moving on the next year, here you can see another short working of rupees 300, okay, came out, which can be recouped out of the 2 years, out of the subsequent 2 years excess working amount. So as per the terms and condition, let's check out that moving on the first year, here you can see in the year of 2015, after using 150 rupees, there is still a lot of amount of excess working remain, okay, after deducting 1500 rupees, okay, of short working, okay, which has been utilized to recoup the short working amount incurred in the year of 2013. So here you can see a lot of amount is still there, so we can utilize to recoup this amount of short working 300 rupees, which related with the year of 2014. So here you can see we also use this amount. So the amount of 300 as short working has been recouped in the year of 2015 itself. Okay, so let's talk about the payable amount. How much amount of royalty is payable to the lessor, which is R limited in the case of sublease. Okay, in the case of sublease, okay, here you can see 750 and 750. So 750 amount is payable to the R limited. Here you can see in the year of 2013 there has been a short working amount. So the minimum rent amount is greater, so that it is payable to the whole amount of minimum rent is payable to the lessor, okay, which is R limited. In the year of 2014, 750 greater, so it is also would be payable, the whole amount would be payable. Okay, so in the year of 2015, as you can see, there has been 2250, okay, as royalty, actual royalty amount. Okay, in the name of actual royalty amount there has been 2250 rupees. Okay, so whatever amount was there above 750 as minimum rent, okay, which was only 1500, out of this amount 1050 plus 300 amount has been utilized to recoup short workings amount related with different years, like with the year of 2013 and year of 2014. So a little amount 450, here you can see 300 plus 150 is equal to 450 amount has been utilized out of this excess working amount. Okay, so whatever amount remained there, add that amount, okay, after deducting 450 out of this 1500, okay, 1500 rupees, whatever amount will remain there after deducting this amount, add it with this, okay, the minimum rent amount which is payable in the year of 2015, 750, add up with this, and here you can see 1800 amount after adding, okay, these two, okay, remaining amount and minimum rent amount, here it comes 1800. The whole amount now would be payable to the lessor, which is R limited, okay, in the case of sublease. So I have already told you how to prepare the, okay, laser account, how to prepare the laser account, and in such case, so before preparing the laser account, okay, let me tell you as well how to prepare the lessor, okay, the lessor's lease account, okay, the normal lease account. So in order to prepare that, here you can see the analytical table. Okay, now this amount, whatever the amount will be come out like this, the whole amount would be payable to the actual owner of that property. So here you have to prepare that actual analytical table. Okay, this is the actual lease table. Whatever amount would be payable by the R limited to the S limited, okay, the actual owner of that property, the S limited. So here you can see the same thing, okay, the same process of preparing the analytical table, okay, no any changes. And here you can see years 11, 12, 13, 14 and 15, okay, similar year. Here you can see. Now you have to know that how to figure out the actual royalty amount, okay, while preparing this analytical table for the lease, okay, only in case of lease, not sublease. Here you can see in the year of 2011, 4000 plus 0, I already mentioned, okay, I already prescribed you that while preparing analytical table, normal analytical table, okay, the lessee, in the case of lease, you have to add the amount of both parties, okay, just because of this is the whole production, okay, the whole production which has been done in the owner's property. So whatever amount will be occurred there, you have to multiply that, whatever amount of production will be occurred there, you have to multiply that with the rate of royalty, so that you would be able to the pay you would be able to pay to the lesser, the actual owner of the property, which is this R limit. As you see in the year of 2015, in the year of 2011, there was a production, okay, of amount 4000 tons by R limited, okay, and nil by T limited. So 4000 plus 0, 4000 plus 0 is equal to 4000. In the year of 2012, 2000 plus 1000, okay, here you can see 2000, 1000, okay, is equal to 3000. In the year of 2013, here you can see 1200 and plus 800, and in the year of 2014, here you can see 5000 plus 600 is equal to 5600. In the year of 2015, 2000 plus 300, 3000 and is equal to 5000. So here, like this, you have to figure out the actual quantity, okay, which is generated by the R limited as well as the T limited, okay. Then after adding them up, you have to, when you simply multiply that amount, like this amount, okay, which you just figure out the actual quantity amount, okay, in case of lessee, you just simply have to multiply that with the royalty amount, okay, as per the terms and condition, by R limited, okay, by R limited for the S limited, the real owner of that property. Here you can see, multiply that 0.50 multiply with 4000, 2000 and multiply with 2000, 1550, sorry, 3000, 1500, okay, and 1000, which in the year of 2013, here you can see 2000 and 1000 multiply after 0.50 and 2800 in the year of 2014, okay, after multiply with 5600 and 2500 in the year of 2015 after multiply with 5000, okay, with 0.50. So here you can see the same thing, and let's figure out the minimum rent amount. Here you can see in the question it is simply given 2000 minimum rent is payable every each year. So here you can see 2000, 2000, 2000, okay, and 2000, 2000 and 2000. For all the years, similar amount of minimum rent would be payable. So simply you have to figure out the excess working deficiency and excess working amount by making out the difference between the minimum rent amount and the actual royalty amount, like 2000, 2000, 0, okay, no, not even a single amount of excess working and the short working. In the year of 2012, here you can see 500 rupees excess working, just simply have to difference, okay, find out the difference between minimum rent and actual royalty. Here you can see 1000 short working, and here you can see in the year of 2014 excess working amount of 800 rupees. This after finding out the actual royalty amount is greater than the minimum rent amount, so that here you can see 800 rupees came out, okay, after the difference, okay, between the minimum rent and the actual royalty. Here you can see in the year of 2015 2500 and 2500 rupees of excess working amount. So simply have to figure out the recoupment terms and condition. Here you can see the same thing as it was in the case of sublease, that recoupment amount, okay, recoupment of minimum rent out of the subsequent 2 years short working, So here you can see in the year of 2015, the first time the amount of short working came out, okay, of rupees 500. Now this amount can be recovered out of the excess working, 2 years excess working excess working amount. Here you can see in the year of 2013 there was a short working amount itself of rupees 1000, okay, so due to that it cannot be recouped. So but moving on the next year, in the year of 2014, here you can see the amount of excess working rupees 800. So out of this, the 500 amount can be easily recouped, okay, by utilize the excess working amount. Here you can see 500 has been recouped in the year of 2014, which related to the year of 2012. And moving on the next, which incurred in the year of which short working incurred in the year of 2013. Here you can see it also can be recouped out of the 2 years excess working amount, okay, 2 years excess working amount. Here you can see in the year of 2014 we have utilized 500 rupees only to recoup the short working amount incurred in the year of 2012 of rupees 500. So after utilizing 500 out of the 800, there is still some amount remain, okay, of rupees 300. So in order to recoup this amount of rupees 1000 as short working, we can utilize this amount, whatever amount is left there, okay, as extra working amount of 300 rupees as well. So here you can see 300 has been utilized to cover up this short working. Now how many left behind after deducting 300, okay, out of the 1000, 700. So 700 amount of short working now can be easily cannot be totally recouped just due to having a very less amount of extra working in the year of 2015. Here you can see we have already 500 out of 700, so 500 had been will be recouped, will be considered as recouped, okay, recoupable amount, and the rest of 200 rupees will be considered as unrecoupable amount. Now let's check out what amount is payable to the lesser. Here you can see in the first year 2000, second year 2000, third year 2000, fourth year as well 2000, just because of whole amount of extra has been utilized, and in the last year here you can see as well 2000. Now simply has to pass out, okay, laser, okay, pass out journal entries. I already mentioned in my previous videos that how to pass out journal entries, okay. So but to make it more clear, I have prepared lasers account, okay, in the books of lessee, which is unlimited. The three main or prime account like royalty account, okay, short working amount, and the third and last one, lesser account. So when you will see my previous video that how to pass out journal entry, you will also know that how to prepare the royalty amount, okay, the royalty account. You just simply have to transfer, okay, the journal entry to account, and you can do it just because you have been doing that since 11th class, okay. So here you can see in the year of 2011, 12, 13, 14 and 15 by preparing royalty account. If you really want to see how I did, you just simply have to pause the video for a while, and after knowing how to pass out journal entry, you just simply match, okay, it while transferring that from journal to the laser, okay. And this one here you can see our short working in the year of 12, 13, 14, 15, and this in the year of similar laser account, year of 1, 2, 12, 13, 14 and 15. You just simply can pose out, okay. Now this is 2500 and here is our 2500, okay, and the account has been closed. Now moving on to the next thing, which is very important in the case of sublease, okay. In the case of sublease, I have already mentioned that was the meaning of sublease. Here the third party has to pay the similar amount, okay, the same thing which he used to do while preparing the lessee account, okay, while preparing the lessee account. So here you can see this is the sublease account, this is the sublease account. So the whole entry will be reversible, okay. Whatever you used to do while preparing the simple uh, account like royalty account, short working and lessee account, okay, whatever you used to do, you just have to reverse all of that. Like here you can see I have already mentioned here journal entries for your convenience, like in the year of 2012, okay, this is the sublease case in the year of 2010. You just simply have to reverse all those entry, okay. Like if just imagine if it used to be the lessees, okay, the lessees analytical table, not sublease, the lessee analytical table, what kind of entry you would pass. You would say that first entry will be passed like the whatever amount, okay, whatever amount is payable to the lesser, okay, of that entry, like royalty account debit, to the lesser. So simply have to reverse that entry. Here who is the lesser, here is the R limited is the lesser, okay, T limited is the lesser. So T limited account debit to the royalty account, and simply paying amount to the lesser, bank account debit to the lesser, okay. Here you can see the royalty receivable account to the P&L, just because of we are charging P&L account just because of considering it as an income, not an expense, as an income. So same thing you have to see by considering this, by keeping this analytical tables for the sublease in your mind, you can easily pass journal entry, okay. You just simply have to reverse all those entries, okay, which I have already told you in my previous video. If you haven't checked out that video, please go and firstly check out that, so that it can be easier for you. So here you can see, and simply you can still pause it and see that. And after that, after this, you just simply have to prepare similar account like royalty accounts, lesser account, okay, similar account, like by changing the name, only by changing the name, like royalty receivable account, okay. In the second one there used to be a short working amount, here short working amount, which will be turned into the royalty receivable account or royalty reserve accounts. And the last one which we used to prepare in case of lesser, here you can see it would be your sub lessee account, like delimited account, okay. you just have to reverse everything, every each thing when uh, it comes to no preparing sublease. Okay, it comes to no preparing in case of sublease, like if you want to prepare the ledgers or passing journal entries, whatever you want to do, just simply have to reverse everything. Okay, with their different names, like royalty payable will be turned into the royalty receivable in case of sublease. Okay, in case of sublease, in case of getting something. Okay, in case of getting something, and short working will be turned into the royalty reserve, and the last one, lesser, would be similar account. Okay, lesser and lesser, that would be similar account. So this was the this. Okay, with this topic I consider that we are done here. I have tried my best to teach you, okay, to perceive you the thing is known as sub lease. Okay, so it was everything regarding this topic. There is nothing more than this in such topic. Okay, and nothing will come up to this topic, like whatever could come I have already mentioned in this video. So if you have any query, please comment. Okay, here you can see, so you can pause out and simply see the process how I have done. And regarding the sublease and lease, while preparing the analytical table, okay, in terms of preparing the analytical table, I have already told you what kind of thing you have to keep in your mind. Okay, so sublease, like the third parties, preparing analytical table and passing journal entries and preparing ledger accounts for the third person. Okay, for the third person, when you are considered being a lesser. Okay, when you are considered being a lesser, like in case of R limited, in case of R limited, R limited, in case of R limited, we prepare the sub lease analytical table, the sublease analytical table, sublease analytical table. And in case of as limited, in case of as limited, okay, we prepared simply analytical table. Okay, you have already done. So we have already done with this another topic which I have, which is known as sublease account. So here we are done, and that's it for this video. See you in the next video. Till then, if you really like my video, please subscribe my channel and stay safe, stay healthy. Thank you very much.